Imagine a world, a financial landscape where you are your own bank, completely in control of your assets and financial destiny. Decentralized finance, or DeFi, is rapidly making this vision possible, removing traditional banks and brokers from the equation and putting the power back in your hands. DeFi uses smart contracts, self-executing agreements written in code to let anyone lend, borrow, or trade without the need for intermediaries. Digital assets directly, fostering a peer-to-peer financial ecosystem. 24/7 without permission from a central authority, offering unparalleled access to financial services. The appeal? What makes DeFi so attractive? Openness, transparency, with every transaction recorded on a public ledger, and user control, empowering individuals to manage their finances with unprecedented autonomy. No more hidden fees, or unexpected charges eating into your profits, or closed-door decisions made without your input or consent. Just code enforcing the rules, ensuring fairness and predictability. Platforms let users earn interest, often at rates far exceeding traditional savings accounts, swap tokens instantly, with minimal slippage and maximum efficiency, or use crypto as collateral for loans, unlocking liquidity without selling your valuable assets. These aren't just digital versions of old products, repackaged for a new generation. They're new ways to create and exchange value, fundamentally reshaping the financial landscape. DeFi is challenging banks and investment firms, forcing them to innovate or risk becoming obsolete, with lower fees making financial services more accessible to everyone, faster transactions, settling in seconds rather than days, and radical transparency, building trust and accountability in the financial system. As DeFi grows and matures, financial services could become as accessible and reliable as public utilities, available to anyone with an internet connection. Banks may not vanish entirely, but they'll have to adapt to survive, embracing the principles of decentralization and transparency. In this open-source financial future where innovation is driven by collaboration and community, at the core of DeFi lies a groundbreaking technology: blockchain. It's the engine that drives decentralized finance, enabling secure and transparent transactions without the need for traditional intermediaries. Blockchain is essentially a digital ledger, but unlike a traditional ledger, it's shared across thousands of computers, creating a distributed and resilient system. This distribution is key to its security and reliability. Every transaction is bundled together with others to form a block, a fundamental unit of the blockchain. These blocks are the building blocks of the entire system. Each block is cryptographically linked to the previous one, creating a chain of blocks that's virtually impossible to alter retroactively. This cryptographic linking ensures the integrity of the entire blockchain. This interconnected structure fosters trust among participants, as every transaction is verified and recorded in a transparent and immutable manner. Once data is added to the blockchain, it's permanent, transparent, and accessible to anyone with permission. This immutability is a core feature of blockchain technology. While anyone can view the transactions recorded on the blockchain, personal identities are often anonymized, ensuring a level of privacy for users. Security is achieved through decentralization, meaning there's no central authority controlling the blockchain. With no single point of failure, the blockchain becomes a much harder target for hackers to compromise, enhancing its overall security. Trust is embedded directly into the protocol itself, eliminating the need to rely on traditional institutions like banks or governments to guarantee the integrity of transactions. The potential impact of blockchain technology extends far beyond the realm of finance, touching numerous industries and applications. For example, it can be used to securely store and manage health records, ensuring patient privacy and data integrity. Blockchain can also track goods as they move through complex supply chains, providing transparency and accountability at every step. Furthermore, it can automate royalty payments for artists and creators, ensuring they receive fair compensation for their work. Ultimately, blockchain serves as a platform for building a more transparent, secure, and equitable digital world for everyone. The inherent transparency and immutability of the technology are fundamentally changing the way we establish trust and interact with each other in the online world. Blockchain is far more than just a financial tool. It represents a foundational building block for the next era of digital innovation and transformation. This technological revolution is only just beginning, and its potential is vast and largely untapped. Cryptocurrencies are the lifeblood of blockchain networks. Bitcoin proved digital money could be secure and decentralized, sparking a wave of innovation. Ethereum took it further, enabling programmable smart contracts and decentralized applications. This led to new digital assets like NFTs, unique tokens representing art, collectibles, or even property. Tokenization now lets people buy fractions of real-world assets, making investing more accessible. These innovations are democratizing ownership and transforming how we think about value. The digital asset landscape is expanding fast, and it's open to everyone. Blockchain technology has undeniably created a new global asset class, reshaping the financial landscape as we know it. This digital revolution is not just a fleeting trend, it's a fundamental shift in how assets are created, managed, and exchanged on a global scale. This new asset class is open 24/7, transcending traditional market hours, and is accessible to anyone with an internet connection. The barriers to entry are significantly lower, democratizing access to investment opportunities for individuals around the world. Investors are now required to assess the underlying networks themselves, not just the companies built upon them. This requires a new level of understanding and analysis, focusing on network health, security, and potential for growth. Furthermore, investors can actively participate in the network's operation and earn rewards by staking their assets. This provides an incentive to contribute to the network's security and stability. They can also earn by providing liquidity to decentralized exchanges and other DeFi platforms, fostering a more efficient and accessible financial ecosystem. This new paradigm blurs the traditional line between investor and active participant, empowering users to take a more direct role in the financial system. Ultimately, this shift is making finance more dynamic, innovative, and responsive to the needs of its users. Governments around the world are now racing to understand and regulate this rapidly evolving space. However, approaches to regulation vary wildly from country to country, creating a complex and fragmented landscape. Some governments are actively encouraging innovation and embracing the potential of blockchain technology, while others are taking a more cautious approach, imposing restrictions or even outright bans. This lack of global consensus creates significant uncertainty for businesses and investors alike. But this uncertainty also presents unique opportunities for those who are willing to navigate the evolving regulatory landscape. Ensuring security and providing robust consumer protection are absolutely critical to the long-term success of this industry. The prevalence of scams and fraudulent activities remains a significant risk that must be addressed proactively. The industry faces the ongoing challenge of balancing rapid innovation with the imperative to ensure safety, security, and the provision of clear and transparent information to all participants. The shape of the next chapter in this story will be defined by how effectively we can protect users from harm while simultaneously fostering sustainable growth and responsible innovation. The rules of this new game are still being written, and the outcome will have profound implications for the future of finance. The road to a decentralized future isn't easy. Scalability is a major hurdle. Popular blockchains can be slow and expensive, but new solutions are emerging. User experience is another challenge. Blockchain must become as simple as today's apps. Despite obstacles, adoption is accelerating. Corporations, banks, and governments are joining in. The future will likely blend centralized and decentralized systems. Blockchain is more than tech. It's a global rethink of money, trust, and power. The story is still unfolding, and your participation matters. Together, we can help shape a more open and inclusive financial world.